So, what are stocks anyway? Well, ownership of a company is quantified in shares. Each share represents a certain percentage owned. Shares are also referred to as equity. When companies trade publicly on a stock exchange, shares become known as stocks. Through the stock market, investors buy and sell their ownership in companies to each other. So, why would you want to invest in stocks? It's cheap. The only cap there is that stocks are bought in batches of 100. That means that you'd have to be able to afford at least 100 stocks of whichever company it is you're interested in. There are high returns. Stocks are risky assets, yes. There's no guaranteed return and sometimes you lose money. However, stocks do have the highest returns of any investment over the long term. If you can stomach the market swings, then you definitely stand to gain. Stocks are very liquid. The stock market is a huge auction house with investors buying and selling their shares on a daily, so when cashing out it's easy to find a taker. If you invest in property, it could take you months to find a buyer and get your money out. So how do people make money buying stocks? Well, total returns from stocks equal capital gains plus dividends. Capital gains refers to profits an investor makes when a stock price rises. For example, say you bought a Safaricom stock in 2008 at 5 shillings and you held on to them up until today when the price is 11 shillings and 50 cents. You'd have doubled your money, and if you sold now, you'd get your money back plus profit. Remember, you always want to buy stocks you know will grow up over time. Dividends typically means you get paid to own stocks. Many public companies dish out quarterly or yearly dividends to owners as a means to share profits with investors. It's possible that in the short term your stock investment could be worth less than what you paid for. Such is life. The market essentially rewards long-term investors. Prices will fluctuate plenty within that time frame. Potential for growth also brings with it risk, but patience pays. The risk eventually pays off.